All right, in this video, I want to touch on some pairs trading, a little bit of teaching. I'm going to come back to bonds because in the treasury market, you trade a lot of the yield curve. You trade different parts of the curve, front end versus the long end. You trade them off of each other. There's a thing called relative value trading in bond market. A lot of institutional desks do, but pairs trade is really more about trading one contract versus another contract, or 2-year paper versus 10-year paper. And in doing that over the years in fixed income, kind of brought that approach to doing that in equities also. And so we do that on a core perspective as far as our little swing trades and our longer term positioning, and then also in the day trading. I think it's really helpful. I'll show you what our group had some success with today. So we'll get into that, guys. If you want to, I'm going to be posting a lot of the recordings of kind of like this video, and like to have some live sessions and just recordings of stuff we do with clients. But if you come to the new CycleEdge University, it's free to join here, the community. And I actually posted both of these courses have a lot of information that are free. I'm just giving it away. And stuff on the model that I think you find really helpful. There's a lot of model work on there. So anyway, sign up for that. I'm also going to put some links to the Discord. So I think it's a little bit easier to get people kind of back engaged and communicate that way. You can come into the free general chat. But yeah, so this is what we did in S&Ps. I came in short just because, let me get this pen out. Make sure this is up here. Come on. One second. Alright, let me pause this for a sec. Alright, I think I got it working now. Hopefully this works. Come in short just because they had cycled up away from pi on some higher time frames. Covered before the open into pi, and then this is the first bar on the open here. So you guys know in the model, when you get that candle down, it's short. I actually did it on NASDAQ. Put NASDAQ up over this way. And the Q's had a bigger move later, but there's just pretty good action into pi. So it was short. You can see it on the 1 minute. Short this bar, and then I covered into pi on the 5 minute. So this is the fractal nature of how we trade. Not only are we using two different pairs, two different indices, the futures on the NASDAQ and S&P. The reason I like NASDAQ S&P because they move pretty much, they have a higher correlation. But short, and then into pi, this is long. This is a picture of what we call a price in the northern hemisphere above the 200, above the pi line. So you come from here back to pi. That was a good spot to be long. So it was long here. It was short NASDAQ on the open. All right, and then long here. And then the structure on the 1 minute of S&P is bearish. So we played S&P short. So NASDAQ came up here. There's another good trade. Go back to the 1 minute. Zoom in. So here, this starts to move down into pi. He didn't really have much follow through, but I'm not surprised that it held pi on the 5 minute. But you can see then we just bounced to the 1 minute pi line that's above. So end up shorting here. It was a good drop, cover. came back up, ended up selling it again. And then in the meantime, this is pie down here on the 5-minute, caught that up. Ended up selling this too, short, and then covering. And then I got back long because I was selling S&P at the same time. So playing this short, and then I was playing a contrarian long in the context of this trend. And then you can see once you get above the bands, you could have added here, and we're playing the long side of the NASDAQ back up this way. And then when we were covering here, you're letting your NASDAQ run up. Took profit on the new high relative to this high. Bought back here. And then rode it back into this push. And then at the same time this was going up, you have the rally in S&P. But this was a good swing line right here. Even if you didn't sell the anticipatory, whether it was at pi or up here with the cycle, when you got this break of this low on the right-hand side of the chart, so my guys know what that means, the right-hand side of the cycle in the chart, you sell that more there, and we did, and then you had the drop cover. And then this just moved into a nice series of 1-minute cycles on the short side. So short, there's the BCI in the middle of this move, marks the middle of the move. But it's short here, cover, you could have shorted more there. We were covering into the support, we talked about it, 5,500, whether or not that was going to give way, but we were covering into this. And I don't know if some of you guys might have took the rest of these cycles on the short side. But I was pretty much out for that. And then we moved into, so you can see the same swing lines here. I didn't play NASDAQ short the rest of the day, but I ended up getting short on the core swing time frame. So I'm still net short overnight. But that's different. This was the day trade move versus the bigger picture stuff. As far as big picture goes, I want to touch on the Russell too. So big picture, the Russell, there's been a lot of longs that have been chasing it because of the chart, even though growth is slowing. But I've been talking about this. We got above this wedge, and this is very technical, so there's a lot of longs here, especially when you've had weakness in the S&P and the NASDAQ. So there's a lot of faster money or longs that have been chasing this, and they've been right, but the problem is we're running into is growth is slowing again, and this was the same type of trade that happened in 2019. The market started to slow first before all the COVID stuff happened, and it did the same, very similar chart where the Russell actually rallied. So I'm probably early, but I've been trying to work a core short up in this zone up here. I think you're going to get a lower high big picture. He can easily come back into the bottom of this range. If this growth slows into the back half of the year, you can get the Russell down from there. But it's kind of a patient trade. So while being short there's been times where we've been being long S&P against it. And then I've also been playing NASDAQ short. So being net short equities overall, long vol, long treasuries, I like the dollar on the long side. I think it's a risk-off growth slowing move. But this has had to be, you had to be a little bit patient, but there was a nice opportunity to sell here in front of this old high on the morning, and I thought about it, and I said, I'll see how it opens, and then it just dropped. But the secondary move we caught, which was really nice. So this is a wall concept I kind of highlighted on Twitter. It's kind of sloppy, but right halfway. This is when you get this selling and you bounce back to the bands and you retrace that move, that's a sell right there. So we sold into that, and you got terrific follow through. It just cratered from there. So that was a good trade on Russell also. So we did that. But big picture, I'm going to be setting up short, course short the Russell. You still got a lot of work to do to break this intermediate term to the downside, all these lows. But I'm trying to fade it contrarian on the rallies, and then I'll cover some if we get down here to pi. If you break pi, then from a momentum standpoint on the intermediate term, everything kind of changes. And then S&Ps. Here we have the intermediate term downtrend. So the NASDAQ has been weaker. I went back short futures on the core side in the swing trade time frame there. And you can see on NASDAQ. So the first sign of trouble was breaking this. I've highlighted that. That gives you the move back to pi. You couldn't hold pi. So you got this going on. Not much of a bounce off of last week's lows. The cycles here didn't even have much of a oversold relieving rebound as far as the RSI being overbought. So we'll see if we get follow through with this cycle back down towards these lows. So I'm sitting short. If I'm wrong and we get above here, then I'll probably play S&P long on the bounce. But staying short NASDAQ. And then bought S&P a little bit at the end of the day just against it. But overall, net short. And as far as the pairs trading goes, it's the same with tens. We've liked the market longer term. Let me go to the yield curve. So the yield curve, this 2s, 10s, has one of the best 8.6 longer term cycles. The business cycle is 8.6 years. And the yield curve just does a great job with predicting recessions and growth. And it also captures the interest rate moves because the Fed reacts to the growth on a slower pace and the market going down if we're talking about stocks. So just quickly, here, growth started to slow into the dot-com boom. When that broke, you had interest rate cuts, yield curve steepened. All right. Market bottomed. This is the 8.6 frequency. It came all the way back here. This was the rally the market had. Everything going on in real estate. Growth started to slow. Yield curve inverted. Then you had the crisis. First, in 2007, stocks started to roll over, real estate broke, all hell broke loose. Financial crisis. This is the rate cuts. We traded this steepener on the treasury desk all the way to 250 and higher. But that was the call then to be in the steepener. That was a good multi-year trade. Finally, stocks bottom in 2009. Growth comes back. Rates go back the other way. You can see here, even there's in 2012, that was pretty much the low in the curve, right with the cycle. This is kind of a mid-cycle turning point. But this flattener came all the way back here. Growth slowed in 18-19. And then this is the pandemic, and the curve steepened back out. This moved back down. You can see the curve peaked pretty good here. This was the reverse interest rates inflationary raising rate cycle. So that inverts for this entire wave down. Inverted yield curve. And then this is where we were the most bullish on the yield curve. There was days down here where you could have bought twos. Never seen this flat of a curve. It was like minus 107 at one point, inverted. So this can only invert so much. That was a great global macro trade to be long the steepener. There's a bunch of leverage there. So anyway, we've been playing long twos. When you play the steepener, you want to be long twos. If you're playing twos, tens, you're short tens. But if we get growth slowing, stocks break, you get the Fed starts to cut, the curve could steepen here and get back out of the inversion. And I think that's the cycle we're on. So we've been continuing to play twos from the long side. Hopefully some of that makes sense. 10-year note, longer term's been making lower highs. We're getting back to some levels, though, where this might turn to a new bull market. 2-year notes, it's been easier to be long. So you can see, though, this is the cutting cycle. and I think now we're gonna get this to start to move back up. We could easily turn this back up. We can head back towards pi. But as far as the intermediate, that's a weekly chart. So intermediate term, there's been a lot. See, we were buying down here. This was when the curve was really flat, really inverted. Buying. This is all these dips we've been buying. Earlier in the week, I had the chance to take some profit. We were talking about that. So all these dips have been buying here, taking profit, buying back twos. I've been watching pi down here. It's only 3 ticks, but you should be buying twos again back this way. So playing long twos, we've been playing a little bit short 30s, but overall I want to be bullish treasury, so I've been kind of patient there on the short side. It was easier here. And then now things have kind of changed even on the long end. So if we get back to these levels up here, I'll short some 30s, a little bit more. But being long 2s and 10s and then short 30s basically. So that's how we're playing treasuries. But that's another good example of the pairs trading where you can be long overall the same asset class, treasuries and bonds, and then you could be short different parts. So we're doing the same thing with equities. So I hope you guys learned a little bit about that. Recap the move again. Check out, join our community here. It's free. And I'll put the Discord links if you have any other questions. And I'd check out some of the model stuff here, guys, on these courses too. You'll get some good value out of them. All right. Talk to you tomorrow.